One. And welcome everybody to another Smart Money Circle update. I'm Adam Sarhan. With me today is Jason Kopcak, who's the CEO and director of AAMC, which is Altisource Asset Management. Jason, welcome to the show.
Pleasure to connect, Adam. Hopefully your day is going well.
Thank you. Everything is going great. I'm very excited for today's call. Jason, I know you have a lot going on. Congratulations on your stock success. I like to throw that out there first and foremost. I know it went when you took over from $8 to over 40. So, I mean, hats off to you, number one. Just well done.
Thank you very much.
And I'm very interested to see where it's going forward. But before we go all there, can you just tell us a little about your story and how you got to be where you are today, please?
Well, thanks, Adam. Look, so my story is, some people say it's not traditional, but give you a little bit of background. I've been in the finance, real estate, mortgage space for over 25 years. Most recently, I spent the last 4 years at Morgan Stanley, senior executive on the finance, mortgage, real estate space, overseeing everything from trading, warehousing, securitization, and investment banking. Prior to that, I spent 6 years at Nomura. It's a Japanese investment bank. I built their resi business from scratch. So I was brought in 2012 to come up with a strategy in the whole loan trading. So I built that business from zero balance sheet and zero capital and zero revenues to when I left in 2018. We had $4.5 billion balance sheet, over 200 million in revenue, and did 65 securitizations in 2017. So wow. that was something I built from scratch with the help of obviously with the help of a lot of others. And prior to that, I have my own mortgage shop. So from 1998 to 2006, I was a traditional mortgage originator, both in non-prime and prime. And finally, before that, I worked at a CPA firm for 4 years. So I went from out of college to a CPA firm, got in unexpectedly into mortgages, completely, never expected to do mortgages. I think my mother and father were not happy about the decision to leave the CPA firm to go into mortgages. And then the crisis happened, I had to start over. You had to just, start over, work my way up in a difficult market, got to Nomura. They gave me the opportunity to show what I could do, built a trading book, went to Morgan Stanley based on my performance at Nomura, helped reposition them, got the opportunity to come here and build another business from scratch. So I'm super excited to take my experience of the last 25 years and what I've seen on the street and roll out what we're doing. So that's my background.
Love it. So it's a great story. Let's talk about AAMC, please. Tell me a little about what you guys do and just a general overview, if you don't mind.
Yeah, look, high level, we're building platforms to originate private credit. So as you look at the economy's changed over the last 40 years. In the recent, the private credit market's been underserved for such a long time. And when you look at it, there's tremendous amounts of capital being raised. Literally trillions of dollars being raised in alternative assets in the fixed income space, which is effectively is private credit. And then there's underserved markets. We all know that the small and medium-sized business owners are what builds this country. And these are the same businesses that are underserved when it comes to needs of capital structure and financing. So we originate direct to these borrowers, these underserved markets, and we distribute it directly into the fixed income accounts, whether the fixed income accounts are insurance companies, money managers, hedge funds. We distribute it directly. So that's what we do. So that's what we do. The market has blossomed in the last 10 years. So if you look prior to the great financial crisis, the alternative space was very small. And typically what happened is these insurance companies and these money managers would go direct to the street. They would go to the Goldman Sachs and the Morgan Stanleys of the world, and they'd buy their product. When the great financial crisis happened, Dodd-Frank set in, regulatory environment, it really shifted the business model. So what happened is JP and Goldman and Morgan Stanley and other similar investment banks became commercial banks. They had to deal with regulators.
Right.
Their ability to source, aggregate, and manage alternative assets is much more challenging in today's market. And so what's happened now is on the flip side, their clients, for example, the PIMCOs, Apollos, the KKRs, the MetLifes of the world, they have been raising incredible amounts, like I mentioned earlier, trillions of dollars in alternative assets to be deployed, and they can't go through the street. The street's just not an efficient distributor of alternative assets anymore. So they have to go direct. So when you take a $300 billion insurance company and they need to go direct to mom and pop to buy product, it doesn't work. So we're set up our business and we're going to originate this product and we're going to distribute it into the proper fixed income accounts. So
got it. That makes perfect sense. So basically what you're saying is the old model before 2008 no longer existed because the entire investment banking model crumbled or failed. They resurfaced the ones that survived as commercial banks, and then they were under a lot more restrictions and regulations because of Dodd-Frank and so on and so forth, and they could no longer participate in those type of investments. So that's hence the birth of your business where you're in now.
You summarized it perfectly. You summarized it better than I did. I think at the end of the day, I wouldn't say they have a hard time. They're very inefficient at participating, and exactly how you explained is what happened.
Love
and
it.
the money and the amount of money in that space has gone up materially, like massively.
So let's talk about the value proposition there, please, if you don't mind. So help the audience understand the private credit markets. Where is the alpha, if you will, or what's the reason why people come to you opposed to just doing it? I guess they can't even do it on their own, but let's talk about that a little bit. How does that?
No, it's a great question. So look, you get a small to medium sized business. They're not going to be experienced enough to go, hey, I need to get a facility, a line of credit. I need to borrow money. Can I go to my local bank? Not going to work.
Right.
Okay. You're going to call one of the bulge bracket banks. They're not going to service you. I mean, they're JP is looking to finance PIMCO. They're looking to finance Tesla and Ford. They're not going to finance the person with 10 employees. That's not what they do efficiently. So you have this disconnect. You have the small and medium sized business owner doesn't know where to go. Okay. They need capital. They're growing. They're an important part. They have great business model. We're very good at identifying who they are. Nice. We're very good at identifying that audience through different analytics and reaching out to them and helping them with their financial needs on the financing side.
No, that makes perfect sense. So let's talk about some of the competitive advantages that you guys offer. Can you share those, please?
Yeah, absolutely. So when you look at our competitive advantages, look, we have a very experienced history. So the company itself was an asset manager that was spun out of Aquin back in 2012. We're New York Stock Exchange listed public company. We have a team in Bangalore, India that has purchased, underwritten, and asset managed $4 billion in resi non-performing mortgages. They have also purchased, underwritten, and managed 15,000 single-family homes. They have an incredible level of experience and knowledge in real estate. They know mortgages, they know real estate, they've done securitization, they've done warehousing, so they have a tremendous level of experience. I've also been able to hire some talented senior executives. My CFO came from Ares Capital as well as Anchor. He's been in the real estate space most of his career. We recently hired Dinah Sawyer. She's our COO. She's an incredible talent. Anybody knows her knows she's fantastic. She's probably one of the best process and operations executive out there. We have another senior exec that we hired who came from a very large fintech. She was also an executive in the consumer products division at Procter & Gamble and Avon. She's got a tremendous background. She'll be more on the revenue creation side when it comes to lead generation and revenue. And look, at the end of the day, I worked on the street for a long time. I have a tremendous amount of experience in real estate, mortgages, the fixed income markets, across the board. So I think our management team is incredibly experienced. We have the cost advantages of having our operations in India. Our corporate headquarters is based in the Virgin Islands, the U.S. Virgin Islands. So we get a tremendous tax advantage for having the headquarters in the U.S. Virgin Islands. So those are all material factors and why I think we have a competitive advantage in the market.
Love that. So let's talk about risk, Jason. How do you handle risk? How do you define it? And then what are some mistakes you see people make with respect to risk management?
Risk it's funny because coming from the street, you see a lot of people's mistakes. You see what small businesses and medium-sized businesses do. So I think for us, it's very important to understand, for us to know that this is paper that we need to create that needs to be high quality. It needs to perform, and it needs to hit salability and capital markets requirements. So when you're dealing with the biggest hedge funds and money managers out there, insurance companies, they have a high level of sophistication and they have a lot of risk mitigants. We understand what they're looking for because we worked with them for, Dinah's worked with them for probably 10 years. I've been in that space for 10, 15 years. So we understand what people are looking for. I've seen the mistakes of platforms. So I think when you look at the fact that my team in India has bought and managed $4 billion non-performing mortgages from the crisis, they've seen the mistakes of the prior round of originations. They had to manage real estate. They know what it's like to work with borrowers. They know what it's like to to see good opportunities and how to structure. So I think our ability to understand what the capital markets and what insurance companies are looking for is very critical. Number one.
Okay.
I think the other part of it is we look at this capital as our capital.
Okay.
So if something happens and it's a loan goes bad, we try to structure it ahead of time so we minimize any risk. So our view is this is our money, this is our opportunity to create good products. So between our experience, which is very deep, and we take this as personal investment, I think our quality of our originations are fantastic. So
the way that you would define risk, just to help the audience understand, is to make sure when you're originating those loans, you're doing it to people that are creditworthy and can actually repay them. Is that a good way of summarizing?
Yeah, I think you're right that the opportunity that people and what their needs are makes sense, that they're creditworthy, and that it's structured and documented in a way that meets the requirements of the capital markets. Okay, so we take that. That's in simple terms. That's what we do.
Got it. I love that. So let's shift gears a little bit, Jason. This is the fun part of the interview here. Now that we've spoke about the business, let's talk about timeless lessons. What are some timeless lessons you've learned along the way, both professional, personal, anywhere in between, that you'd like to share with the audience?
Look, I think modesty is super important. So I too many times I just think modesty is a must. Okay, number one. I think number two, know that you can always do better. Like regardless of how much you do today, you can always do better. With that being said, be accountable. Like at the end of the day, when you make mistakes, first thing I tell everybody is look in the mirror, ask yourself, what could you have done better or different to prevent that mistake? Too many times you see people pointing to others.
Right.
And I think it's something that's in your personal life as well as your work. I tell my two sons that, like, look to yourself first. I think the other thing is important is build partnerships, whether it's at work, whether it's your coworkers, whether it's business. It's about partnerships. It's got to be win-win.
Yeah.
So it's important to build partnerships. You're going to make mistakes, so understand, live for another day. Don't let today take down tomorrow.
Nice.
Like at the end of the day,
I love that.
Stuff happens. It's a bad day. Just honestly, get home, get to bed. The sun's going to rise. It's going to wake up. You can start over. You can reflect. So like I've been through a lot of crises in my life, and all I can tell you is do right, make good intentions, and live for another day. And the other part is, it's so true. You hear it over and over, is you're only as good as your teammates. This goes back to partnerships. Like at the end of the day, surround yourself with talented people.
Yeah.
And if you surround yourself with talented people and the good high character people, that's going to raise you. It's going to raise them. It's good for everybody. So I think those are important lessons I try to live by. I do remind my staff, my sons, I remind them. My kids hate, they get me in a car, and if it's a 5-hour drive, there's 3 hours of me pounding this into their head.
I do the same with my kids.
They're like, oh, Dad, road trip. Oh, they got to get the first hour out of the way because they know Dad's going to give them the philosophical lessons. So
get in the zone. I'll tell you a funny story, Jason, while I have you. 2 weeks ago, we went down to Mexico. My kids are still younger. I have an 11-year-old daughter and a 6-year-old son. And we went to the Nickelodeon Resort and Hotel, right?
Oh, wow.
So as we're there, they give you the character breakfast and then the cabana and all the stuff they throw in there. You want this. And, one time the character breakfast was $500. I'm like, no, thanks. And then like the cabana, $300. No, thanks. What about this, all for free, but come to our timeshare / membership presentation. Oh. It's not a timeshare presentation, right? So I told them, I said, all right, I'll do it on one condition, bring my kids. Like, no, the kids have to go to the kids clubhouse, that because it ruins the sale. I'm like, no, we're not going to do unless the kids are involved. So I kid you not, Jason, true story. I took them with me. We go through the whole presentation. They go the SpongeBob suite, this suite shows you, they build it up for you. And I asked the salesperson, like, how much does it cost? They wouldn't tell you till the very end because people buy based on emotions. So as the salesperson's going through their routine, I'm stopping them, interrupting them nicely. And I break it down to my daughter. My son's too young, but my daughter who's 11, and say, oh, okay, this is why they said that, because they want you to do the emotions and then build the urgency and so on and so forth. So I can relate 100% to what you're saying.
Oh, it's too funny. I love that story. It's funny for me because when my kids were younger, I don't care if it's 4 years old, I was drilling them with these lessons.
It's so powerful. It's so powerful.
It does. It pays off. It pays off. So
love it. Okay. What are some timeless mistakes you see people make and that you've learned, and how do you avoid them?
Well, I mean, some of these are consistent with what we said prior. Arrogance. I mean, look, I've been a lot of places. I've been small shops. I had my own shops. I was the arrogant person at times in my life. being on the street, I've been in big shops, small shops. Arrogance is a killer.
It is.
I don't care. It's just a killer. Ignoring data. Like the one day I'll say, I'll give Morgan Stanley credit. The amount of data we had was incredible. They are a machine with data, and data's so powerful. So gathering data, reading it, understanding it. A lot of people who ignore it. A lot of people who don't gather it, and I think data is powerful. So a lot of mistakes are people not obtaining or following the data. Listening. At the end of the day, listen to people, listen to your borrower, listen to your investor, listen, ask questions, at the same time, trust but verify, so somebody tell you something, that's great. You should listen, you should take note, but then you need to go verify it. So quite often people just believe what they get told. Right. One, they don't listen. If they do listen, they just go with it. I can't tell you how many times people it's incredible, but this day and age, the lack of diligence, the lack of verification, people getting hired who, if you just made a few phone calls, you would figure out wasn't the right hire.
Right.
So, it goes back to earlier. I feel bad saying the same things over and over. People not being accountable.
Yeah.
I think people not being accountable, and communications. I mean, I pounded my people, like your coworker next to you, get to know them, communicate, let's talk. So I think those are mistakes you see consistently, that they're easy mistakes to address. They happen all the time. So
no, it's so true. So let's go to data for a second. You make data-based decisions. What I know, emotions, it's one of the core principles of my book, is to remove the emotions from the decision-making process. How do you look at the data objectively and not let your emotions interfere with it, or your biases? I'm bearish, the market's bullish, or whatever the case may be.
Well, no, it's a perfect example. So recently, look, you hear all the stories on TV, or on the radio or news, housing crisis, housing is going to collapse, and rates have tripled, and if you're in a house, it's going to crash. And we were gathering data the whole time. We had calls coming in, we had our loans paying off, we had data we were buying that we're looking at, and it was telling a different story.
Right.
Okay. So you got on one end, you get this emotional pressure, and the other end, you're looking at the data, you're like, it's not as bad as people say it is, and then you got to understand the factors. So I think it's important. Like we have massive amounts of data. I'm a data junkie. We buy it. I don't think we even use a fraction of what we gather. But I think you got to look at the numbers. The numbers don't lie. You got to and you got to find out where they came from, how they were sourced, what's it telling you, and then you got to come up with what's it going to tell you. And data doesn't lie. And at the end of the day, I don't know. I've seen it through my career. I'm a big believer in data. So
I love it. So, okay, thank you for all that. That's very, very helpful. I love the humility part too. The market's just a great way of humility. Just the humbleness is so powerful, and listening. These are great. Jason, what in your experience makes a great leader?
Oh, I mean, vision. Period. I think a great leader, you got to have vision. People say it. And there are people, you just got to have great vision, number one. Number two, I think being a leader takes a lot of energy. So if you don't have passion, you'll never survive as a leader, because passion will help you drive through the amount of energy drain. Making hard decisions. It gets lost on people. Like, you got to be able to make hard decisions.
Right.
And I think too many people don't understand that's probably the most important ability to make that hard decision. I think recognizing undervalued talent. There's plenty of people you come across in your career who they make other people look good. They make other people money. And other people take the credit. Can you source and find that person? Can you recruit them? And then can you empower them? I think at the end of the day, you find that undervalued talent who has a proven record, and you empower them. I think if you empower them, that separates leaders. Too many times that just gets missed. Somebody looks at the resume. Oh, you're from Goldman Sachs, or you're from Morgan Stanley. Great. Well, resume's resume. How did they get there? So I think it's important. And always, again, look inward. As a leader, you got to start with yourself first. And I think, I think that's incredibly important. So.
Let's talk about mindset, if you will, because, two questions here. One, did you feel at times in your career that you were that undervalued asset that were overlooked? Had you had the opportunity? God. Yeah. Okay.
Like I have very specific instances. So first off, the two senior executives I just hired were two people who I saw other people taking credit for.
Oh, wow.
And that was literally the driver. I saw the talent. I saw what they did, and I hired them. And I told them that. I said, this is your chance. You're a leader now. And so they appreciate that. But I've been in there my career. Like I had one of my stops that I mentioned, I won't mention the name. I built the track record. I built the business from scratch. It was my strategy. Everything we did, like I was the front end saying, let's get into this space. This is how you do it. At the end of the day, when it came time for promotion or getting paid, it was somebody else getting paid. Yeah. And that person cried more and that person demanded more. Yeah. And then when I get to the next stop, same thing, you bring the business in, you see people coming in. Oh, let me take credit for this. I'm like, okay. Yeah. So at the end of the day, I was definitely I've experienced that, but that's part of life. That's just how it goes, and you have your own choices. You can sit there and cry about it, or you can move on, and myself, great experience, love those people, but that motivated me to take the next step. So at the end of the day, I take those situations and they drive me. So
make you stronger. Use it as fuel instead of having it.
Use it as fuel.
I love it. Yeah, I've had the same situation several times. Okay, I could see that in your eyes, kind of a thing. Hence the question.
I appreciate it.
So Jason, let me ask you this question. Let's talk about mindset and decision making. You said make the hard decisions as a great leader. Can you talk a little about your mindset? I can see the optimism there, but elaborate a little bit. And then how do you go about making that tough decision?
Well, I think it's important to really analyze all factors. Okay, you run into a problem, you run into the dilemma. Okay, what are all the drivers that create that situation? Right. You have to evaluate every driver, okay, and every factor, and you got to do your diligence. We talked about, and you got to figure it out. And sometimes you're going to come across an answer it's clear that you don't want to make. I'll tell you up front. I hired somebody recently. I've known this person many years. Good friend of mine. Yeah. And so when we were running through problems here. And when I say problems, when I say we were on problems, we were having some sticky points on certain issues. I evaluated every aspect. And the last thing I evaluated was my friend. Got it. It was the very last thing. Because I've known this person many years. I've known her competency, but that's where the problem was. Got it. So then when so at that point, you take a look and you say, okay, what's happening here? So I think it's important to look at every aspect and dig up and get actual information, value it properly. And then what's it take to resolve it? And sometimes it's a change. Sometimes it's stuff you don't want to do. Sometimes it hurts people's feelings because they don't understand it. So it's very common. I've seen it in the street. Yeah. I've been on the street where you see some people create revenue. Some people are there. They're very good at politics, and the people in politics are getting rewarded. You got this person who's working 20 hours a day. He's busting their butt. So you gotta you have to really dig in, evaluate it, and make the right decision. I love that. So it's almost like look at it from multiple angles, not just your not just your gut reaction. Okay, got that. Love that. Okay, what are some obstacles, Jason, that you've had to overcome in your career, and how did you overcome them? Look, I say this all the time. I failed many times. Yeah. There's just so many times in life, whether it's in sports or education or job, I've made mistakes. So I don't care who you are. If you fail, look at how you failed, why it happened. You got to get back up. You got to set a goal. You got to set a plan. You got to work towards it. You got to reevaluate. So I failed many times. I grew up very meager means. My mom barely graduated. She's awesome. God bless her. She's amazing, but barely graduated high school. My father effectively didn't graduate college, and I had no guidance growing up. From an education career standpoint, yep. Had to figure things out. And so I think from a standpoint of learning how to figure things out, what you want in life, when you fall down, how to get back up. I think all that, when you take it all together, those are obstacles that help me a ton. Not having, my kids, they have me giving them advice, and I have, I've done pretty well. So I've been able to give them the resources they need. I didn't have any of that. And so a lot of where I'm at today is because I didn't have that. I had to face adversity. I had to scrap. I had to figure things out on my own. Yep. And look, there's people who have it way tougher than me. So I don't want to sit here and think that there's people who have it way harder. But again, facing adversity in my life, making mistakes, all that helped me get to where I'm at. I failed. I've had businesses fail. I've had the market collapse, and I didn't have money to fall back when the great financial crisis happened and the mortgage company failed. I didn't have mom and dad to call them up and say, hey, can you bridge me? I literally had to go earn money right away. Right. And I had to go swim upstream. And I didn't, when I got on the street, working at Morgan Stanley and Nomura, wasn't like I knew anybody. I didn't have any family friends. Hey, I'll get you hired at this shop or that shop.
Right.
That was me cold calling
Mhm.
and saying, hey, here's a business idea.
Yeah.
So those are situations, that have helped me become who I am. So.
Love it. I love it. So what's the best piece of advice you'd like to share with your 30-year-old self or with the audience?
Oh man. So look, when you're 30, I've been there. So I'm talking to myself. You think but just know that you know less than you really know. And as you get older, you realize that there's a lot you don't know. So I think we've become much more confident that we don't know much. Look at the long term versus the short term. Like I can't emphasize, like, set a goal that's a long-term goal and work towards it. So work long-term. Too many people compromise their long-term goals for today and immediate. You can never read enough. I mean, just read. I think it's incredibly important. We talked about this earlier in the podcast. Listen to others. Listen but verify, but listen to others. Ask them questions. Connect with them. There's a lot you can learn from connecting with people. And there's a lot you can learn from asking questions. So I think it's incredibly important at all levels. I don't care if it's, getting coffee. I don't care if it's the CEO, whoever it might be. I think you learn a lot. Always be curious. I mean, the moment you lose your curiosity, you start getting, it's over.
Yeah,
it's over.
Yeah,
and it's the same thing. Your passion. But just find out what passion, what motivates you. It's incredible. It's incredibly important to connect with your passion. And I don't care if you're 20. I don't care if you're 30. Find your passion. It will help drive you. So.
Love it. Well, Jason, thank you so much for coming on the show. The ticker is AAMC. What is the best way for people to get a hold of you? Is it website or LinkedIn, or how do you?
Yeah, the website. We have the AAMC website. Information's on there. We have an IR page. Feel free to hit me up. We respond to everybody. So excellent. We have tons of shareholders who I've had plenty of conversation with. We have people interested in the company, nice. Investors. We believe in communication.
Love it. We'll have the links in the description below. Thank you so much for coming on the show, Jason.
Thank you very much. Thanks, Adam. Hopefully it was helpful. Take care.